Hi, and welcome back to Stop Being Sold. My name is Michelle, and I'm here with Brian. And in today's video, we're talking about what the heck you should do with your retirement savings in the 21st century. Do you fund your IRA and your 401k, continue doing that, or fund both, or say screw it and hold Bitcoin for higher returns?
Yeah, good question.
Right? I mean, I'm asking it. I know a lot of people are asking it. And yes, you can hold various cryptocurrencies, including like Bitcoin, in a self-directed IRA. That's been going on for a while. So yes, you can combine the two. And now, just a few days ago, or weeks ago, I should say now, Fidelity is allowing up to 20% of your portfolio holdings in Bitcoin. And that'll be starting this fall in 2022, unless the government derails that. But, and we've done a ton of videos on these topics, so do check them out below. But today's conversation really is about something deeper. It's about what you do with your money now to ensure you have a better financial future.
Right.
Now, Brian, I was on Twitter when the Fidelity news broke. And there were a lot of people just, in chats, whether it didn't matter whose tweet it was initially breaking the news or, sharing the news. But I saw a lot of things like Bitcoin's my retirement plan. I don't care about my 401k. I don't even fund that stupid thing. Right.
I saw quite a few comments like that as well. So
yeah. And then, I mean, that's why we're having this conversation today. I saw it. It's like, hey, we need to talk about this. So I have an IRA personally. I don't have a 401k, but I found myself wondering if traditional retirement savings are the way to go for my future. So okay, look, it's $6,000 to max out my Roth IRA. Whoop-de-doo, right? But, that's $6,000 that I could put into something else. Money is money. So, should I like keep DCAing into Bitcoin? Should I not fund that? Should I do both? Even with the taxable, I do this channel. I know one of the reasons that the tax benefits of some of these traditional retirement accounts are worth taking into consideration because it's not always what you make, it's what you keep.
You're right. It's a valid question too. Yeah. And I know a lot of people younger people are asking themselves this. So recently I was at that National Bitcoin Conference. Ooh, got my shirt today in Miami. And
you got proof you were there. You bought the t-shirt.
I was there. So I got pictures too. So, but it was pretty cool. But, people just weren't concerned with their 401k.
No.
And I met several attendees, I became great friends with them now. And we talk about this quite often in the Twitter spaces and stuff like that now. They're more interested in funding their crypto than their 401k accounts. So me being the 24-year financial advisor, I started asking a few questions. I wanted to see what your thought process were on some of these. So here's some of the answers that they gave to some of my questions. So Michelle, I asked them, what are you actively doing with your 401k? And here's some of their answers. I don't even open my statements. I don't rebalance. What 401k? that was probably one of the better ones. What 401k? What about? And then I said, okay, so the ones that do have a 401k, are you contributing to at least the match each month or each pay? And some of the answers, nope. My money goes into crypto and NFTs first. Anything left? Maybe.
Yeah.
Another one, yes, only up to the match. The rest goes to crypto. And another common one was, no, not at all. Don't even bother with it.
Yeah, that's for 401k. It's the same thing for IRAs. I just was having a conversation with a friend of mine talking about the IRA, and she's like, I just put in about $3,000 and then took the rest over so it was like half and half, right? Sure. Well, more like 80% into crypto and 20% into her traditional, or not traditional. She has a Roth IRA. Sure. But here's the thing. There's not a lot of guidance or information out there. And the fact that you even had those conversations with those people at that conference, it's huge because there's not a lot of dialogue happening around this topic. Sure, again, I mentioned it before, we're seeing the melding of traditional with the crypto and self-directed IRAs and now 401ks with Fidelity leading the charge, and allowing crypto and 401k portfolios, but there's not productive dialogue going on.
No, you're absolutely right on that, which is one of the points of this video. We want to get the conversation started because it's
Sure.
that important. And like you said, when I was in Miami, Michelle, I just had to know for myself, why aren't you doing this?
Sure.
And, so I started asking the questions. You don't learn until you ask the questions. There weren't no other financial advisors out of 5,000 attendees that were asking these types of questions of why you're doing this and not doing the traditional retirement planning.
Sure. So, I mean, it's your money. Do what you want, right? There's no right or wrong answer. That's the other thing too.
But help me understand your reasoning behind it, because there's that big of a generational shift in wealth planning right now. So
sure, 100%. So before we dive in, if you like this video, content of the video, if you like the conversation we're having, hit that like button, help us grow the channel. Also, don't forget to subscribe and hit the notification bell. All right, now that I'm done plugging the channel, Brian, my first question is, what do you say to someone who has 401k or an IRA who isn't funding either of them or one of them at all, right? Despite the tax benefits, despite the tax benefits of these plans, if this person's still long, and let's just use Bitcoin, they're not funding anything else. What would you say to that?
First off, Michelle, if you aren't funding your 401k and your company matches dollar for dollar up to a certain percentage, you are losing a 100% return on your contributions.
Yeah.
Sure, you're not getting 1,000% returns like your Bitcoin or your cryptocurrencies, but 100% isn't something to walk away from. No, that's my personal opinion on that.
So. Not at all. And what about the Roth? Would you just say, hey, look, when you're putting it in, I mean, this is tax-free at the end of the day. What would you say to that?
Well, and that's the other thing. Think about the Roth IRA, which is one of my favorite products ever created in the financial space. It's tax-free in retirement. So, I mean, perfect scenario would be, of course, to put your crypto and NFTs into a Roth IRA. We're not there yet.
Sure.
Into the Roth IRA. But, make the best decisions of your personal situation. Maxing out your 401k up to the company match. Second, fund that or the Roth IRA up to the match. Whatever's left, crypto, if that's what you want to do. NFTs, if that's what you want to do.
Sure. Brian, one of the things that, I've been in the crypto space for years and years, and the one thing that I don't see a lot of, and it's starting to happen more and more, are people looking at the tax consequences. So, I've just so there's a difference between an investor and a trader. Right. I've heard, and I know quite a few people who've had to sell crypto at the end of a tax year, in order to pay their tax bill on it because of how it's taxed. So, you do the math, sit down and do the math. And I don't think that that's really something that's taken into consideration when I'm ho-humming around about, I don't know, should I fund this Roth IRA? And again, it's only $6,000, but $6,000 in some of these crypto assets.
$500 a month.
6,000, excuse me. Yeah. But that can go real far it can also go way down too in the crypto space. But just looking at the tax benefits.
Well, and think of it this way. If you look back and pull up a chart of any cryptocurrency from the 10th to the 15th, 17th, 18th of April this year, what happened? Okay, there was a big sell-off during that time frame. Why was there a sell-off during that time frame? Why was there a sell-off during the NASDAQ at the exact same time? Well, guess what it was? People are now realizing, oh my gosh, I got to pay my taxes. Okay, so this may be a trend, Michelle, that we start seeing every April. So, and trust me, in the NFT space, in the crypto space, why is there so much education being put out there right now about the taxation of this?
Yeah, and you're seeing more and more of it.
People don't know it.
I haven't seen it for years. This is one of the first. Last year it started, and this is the first real year. I mean, I even have an accountant that specializes in crypto. Like I have a crypto tax accountant. I am not going through all that myself. No, thank you. No, thank you. One thing too, before I just really quickly I think that for me, a lot of the concern about where I'm putting my money is, do I trust a government not to take it if it's not in crypto? Because if I hold my keys, it's my crypto.
You're exactly right. And we're seeing that more. That conversation is widely dispersed out there. And every event I've been to recently in the NFT and crypto space,
because it's your money.
A trust factor of our government with our retirement planning. So,
all right. So which leads me to my next question. Here we go. With that, I think it's trust, because markets are built on, I mean, it's trust that things are going, it's confidence, right? And if you don't have confidence in an institution that's running something. So with that said, do you think that traditional retirement savings plans are going to be obsolete in the near future?
Oh, great question, but no, absolutely not. Okay, and here's why. There are millions of people today that are in the cryptocurrency market,
Sure.
NFT market, and all that, right? But there's also millions of people who would never touch crypto, Bitcoin, anything in NFT. Okay, these people are the old school people that truly understand what the 401k, the power of the 401k and IRA is. They rely on them each year to get their tax break. They have CPAs that say, hey, to get a lower tax break or a bigger tax break today, you've got to fund this real quick. And that's why, as a financial advisor, Michelle, every April, and trust me, they were calling on April 18th this year to fund their account for the previous year.
Yeah.
So, I mean, it's like, okay, guys. And that's why I'm always available that day, because I know somebody's going to call and say, hey, I got to put my $6,000 or $7,000 in. And it happened. There was 4 clients that called that day this year. And it's like, really?
Yeah.
Okay.
Well, and also now, you know, like that we're seeing this merge. I mean, again, self-directed is one thing with the Bitcoin holding crypto assets in it. But, you know, so if someone's watching, if you've got a 401k, should someone, and Fidelity, right? They have a Fidelity account. That's going to be key. I mean, this is probably when you want to put Bitcoin into it. Am I wrong? Like,
yeah, and you know, if it fits your risk tolerance and your long-term goals. Think about this. If your employer, here's what I like about it. Okay. If your employer's matching and allows you to put, let's say 5% into Bitcoin in your Fidelity 401k account, right? You double your Bitcoin just by your employer's match. There's your 100% return. Would that create the excitement that is lacking in the 401k space and get people to open their statements again? Very good possibility.
Probably. Yeah. All right. One last question before we wrap this up is, you know, one thing you mentioned earlier, people having CPAs who call and say, hey, fund this. For me, you know, I have someone who helps me as well. And it's really frustrating because a lot of financial advisors and money managers aren't into crypto. In fact, they're like, you know, like you're just like, what? Like I literally had someone 4 years ago was like, you know what you should do with this? Like, we're just going to put it in a money market. And I just was like, are you insane? Like, no, I bought Bitcoin with it. Look, I did good, right? I did good. That's all I'm saying. But like, do you think that this is contributing to the disconnect, like to the one or the other kind of camp mentality is what I'm calling it. So either crypto or only traditional saving and investing, that the fact that there is this either a lack of education or a lack of understanding or lack of just not caring.
Well, and think about this, in the financial advisor space.
Yeah.
The advisors are getting older, Michelle.
Right.
Okay. I think the average advisor is nearing 60 now.
Oh, really?
Okay. Yeah. So think about that. The next generation isn't coming into the space. And so you actively see a lot of recruitment in this space from the big fund managers out there and the wirehouses. They're actively recruiting new, younger talent. Okay. Well, the older talent says, you know what, I'm set in my ways. I'm not going to change. This is what I've done for years. Why change? I'm nearing retirement. Maybe that's not the client I want to work with.
Sure.
So, yes, they may be missing an asset class that their clients want to invest into. I've got clients today calling saying, Brian, can I invest in this? Can I buy this? Can I buy this? And yes, you can. And, we've already heard of investors leaving their advisors for not allowing them to invest into crypto. And some of them advisors are like, okay, whatever, just go on. I'm okay. I don't need you. So my advice, which is not financial advice and not FA, to advisors is learn the market. Keep your mind fresh to new ideas.
Yeah.
It's never too late to learn something new. That's why I went to this conference in Miami. That's why I'm going to another one in New York City here in a few weeks. And look, it's where it's at. Help me understand how the next generation is thinking.
Sure.
You need to stay, as a financial advisor, you need to stay in the forefront of where your consumers are. You don't want to go into that space. That's okay. Some other advisor will replace you. It's that simple. That is where the transition is happening. So.
All right. On that note, thank you for this. I mean, there's no set answer to this conversation. I just think it's worth it. It's worth talking about, because there are some people who are, when you put those blinders on, it's very dangerous. You need to be able to see the big picture and not just go into crypto because that's like, you don't trust this or this, that, and the other, or you don't like that because it was your parents, vice versa. Right. I don't want to learn technology. I don't trust that. What if the da-da-da-da-da, I mean, there's so many what ifs. So
that's a good scenario you just brought up about putting the blinders on. We just had the Kentucky Derby, and I understand the horse racing market. And, trainers do that for their horses. And it's like, we want to just keep you focused. Well, big brokerage houses may do that to their financial advisors also. Look, you look at our products and don't expand outside that realm.
Exactly.
And so this is a great conversation to be bringing up right now, because consumers are talking about it. So.
Yeah. All right. Well, thank you so much, Brian, for this. Thanks to everybody who watched. And if you've made it to the very end here, hit that like button, helps us grow the channel. And don't forget to subscribe. Thanks, everybody, for watching.
Thanks, everyone. Have a great day.